Thank you for coming and joining us for the Ministry of Managing Money webinars designed to help equip congregational treasurers and people who are involved in financial management in their congregation. So we'll go to the next slide. Just a reminder of the protocol for these webinars. You've been muted by the host and you're going to stay muted and use the chat to ask anything. We will monitor the chat and try and respond to questions as we go or at the end. It just depends on how it works. We may have an opportunity to unmute at the end, but do use those chats and we'll try to respond to you. Today's webinar is on receiving and receiving God's gifts, exploring congregational revenue. Next week, we're going to really explore sharing God's gifts and examine congregational expenditures. So everything related to congregational expenditures. And then in January, we're going to look at how we can take our financial reports and or financial statements and how we can tell the story and do reporting both for your statistical report, for the CRA, for the members and session, as well as for donors. So we'll look everything that has to do with reporting in January. So we hope that you'll join us for these webinars or that you'll watch the recordings. If you have questions afterwards, don't hesitate to ask. Next. Feel free to spread the word. I've had a number of people ask if they've got permission to share the recordings. Yes, we've posted them on the website so anyone can watch them at the Presbyterian.ca leadership webinars. Feel free to share around. We've posted the PowerPoints up there. We've posted the notes. Feel free to adapt them to your own situation if you want to make them into smaller sessions and teach your session or present them to your finance committee or your board of managers. Go ahead, use them as much as you want. We've put the work there so that it can benefit you. All right, so let us begin. Receiving and receiving God's gifts. I'm just going to catch up my notes to this as well. So today, this webinar is all about gifts, and it's going to look at how we receive gifts, special considerations when handling gifts. We'll look at digital giving, receiving guidelines and requirements, and saying thank you. So let me introduce you to the presenters. I've got myself, I'm Karen Plater, the Associate Secretary for Stewardship and Planned Giving. And I'm joined by Maurice Mawhinney. He's the Presbytery with the Presbytery of West Toronto and on the PCC Finance Committee. And he's been the Presbytery's treasurer for many, many years and done many of these presentations and had lots of experience with the ins and outs of money. So Maurice will be helping. Jim McDonald is the Development Manager for Stewardship and Planned Giving. And he's going to talk about some of our planned gifts and what you can do when receiving planned gifts. Maggie Lewing is the gifts administrator for the PCC, and she helps everyone do the ins and outs when they're giving gifts as securities, if they want to buy an annuity, and she helps to prepare the acknowledgement letters and the receipts. So she's definitely got a wealth of knowledge, and she'll help today as well. And then we're joined by Oliver Ning, the CFO of the Presbyterian Church in Canada, and he's available to answer questions and to pitch hit if we're needed in the middle of the presentation. So that's who we have. The presentation is mainly based on the material that you can find in the Treasurer's Handbook, and you can download that from the website. And it also integrates principles that can be found in Church Finances for Missional Leaders, which really looks at all of these different details and why we do the things we do and integrates them with stewardship and scriptural teaching. So that's really great. Okay. So before we begin, we just want to situate ourselves and what we're looking at and why we're doing this work. If any of you have ever read, or if you haven't read, Henry Nouwen's Spirituality of Fundraising, it's a little wee book and it's a really easy read and it's just excellent. And it talks about raising gifts and helping receive gifts. And he reminds us that we're inviting you, that we're all investing ourselves to the resources that God has given us, our energy, our prayers, our money into this work which God has called us. And when we invite people to give, that's what we're doing. We're inviting them to participate in God's mission and ministry. So it's really an honor to be part of this. The next one. It reminds us that we have to sort of reclaim stewardship and remember that stewardship, it's not a code word for giving to a church budget. It's really about how we respond to the call of God in our lives with all our gifts, time, treasure, and talent. And sometimes we just have to let go and remember that God will provide the resources that we need and that we're doing this work on part of God and God is working through us. So it can help take the pressure off somehow. When it comes to giving money, though, there's a lot that the Bible says that's important. We can't be stewards of God whose very nature is giving without giving resources away. Giving is the very act of sharing something of value. And we know that money is a symbol of our lives. And so giving money, even though it's not the only thing that is about stewardship, it is a big part of stewardship. There are many examples in the Bible of people giving money, both cash and non-cash gifts, to build the temple, to care for the stranger. The Bible shows us that giving can help build people up, install dignity, and celebrate life. But it also shows us in some ways that it can assert power differences. It can make people feel dependent, and it can be used to take advantage of people. So as Christians, we want to be sure that we are giving in the way that God gives, generously, abundantly, unconditionally, sharing love, joy, and faith. And I never want us to lose sight of that when we start to get into the details. And I know most of the treasurers I know this so implicitly. So I just want to be sure that we're all on the same page. 2 Corinthians 9:7, we should all have this one memorized. This is that God loves a cheerful giver. So I always think this should be one of the happiest jobs in the church. I liked that John McMillan in his book, Stewardship Unlimited, noted that when you ask people to give, some people say, give until it hurts. We quickly discover how low their pain threshold is. Instead, we need to say that we shouldn't ask people to give until it hurts. We should ask them to give until it makes them feel good. I think that's what Paul meant when he said, don't give reluctantly or under compulsion, for God loves a cheerful giver. And in the Greek, the word cheerful can be translated, the word that they're using is hilarious, which we get the English word hilarious. So Paul is really saying God loves the hilarious givers, those who enjoy giving so much that they gleefully exclaim, let me do it again, yippee. Okay, so the other thing that Paul says, and I think this is equally important, that the gift is acceptable according to what one has, not according to what one doesn't have. So we don't need to keep up with the Smiths or the Joneses. We need to give according to what God has given us. People don't need to go into debt in order to go give to the church. God is asking to share the resources that have been shared with you. And so it's really important, particularly if we're talking about planned gifts and bequests, we're asking people to give what's been given to them. They don't have to give more than they have. And then finally, we just want to remember again that donors don't give money to your ministry. They give to God through your ministry in order to touch the lives of other people. And donors will give generously when they feel their money is making a difference. So we really need to integrate this and remember this when we talk about gifts. So that said, we're going to get down into the nitty-gritty about giving and gifting and receiving and all of that. And I'm going to give some background and talk about why we do the things. And sometimes you might think, oh, she's going into a lot of detail. You don't have to remember all of this. But I think sometimes it helps us to know the foundations and the basics about why we do the things that we do and why we have certain rules and regulations. So that's why we'll give a little background. And the first is charitable registration. Every congregation should have a CRA number. It is possible to lose the CRA number, so it's important to stay on top of your reporting and your processes. We've had congregations lose their CRA for a number of reasons, and it's always a difficult and challenging thing. And I can tell you that their members and donors and supporters aren't very happy when that happens, because no longer can the church issue receipts, and so people may not have the receipts for the gifts that they're given. So it is something important. So let's just look and see, why do we have our CRA and our charitable registration? Well, the government gives a charitable registration number to organizations which fulfill charitable purposes. And there's a number of them, which include relief of poverty, advancement of education, religion, and advancement of religion and certain other purposes. So it's pretty easy to see that as Presbyterian congregations, we fall under the advancement of religion. So what type of activities can we do under this charitable purpose? Let's go to the next. The advancement of religion is defined as preaching and advancing the spiritual teachings of a religious faith, maintaining the doctrines and spiritual observances on which those teachings are based. So most congregational activities will fall neatly into this. It might include, next slide, worship, maintaining the building for ministry, doing Christian education, your mission and outreach work, caring for the vulnerable, and seeking justice. These activities are what you do to fulfill your charitable purpose. Without a charitable purpose, your organization can't have charitable activities. So, how can we carry out charitable activities? Well, the income tax permits registered charities to operate in two different ways. The first one is to carry out their own activities. And the second is to give funds to qualified donees. Well, it's easier to define the first one. What's a qualified donee? So I'm going to start with that. A qualified donee is other registered charities and also includes a much longer list with things like municipalities, provinces, territories, the United Nations and its different agencies, public bodies performing a function of government, universities, registered journalism organizations, low-cost housing organizations, national art service organizations, Canadian amateur athletic associations, and there's even more. So it can be something to look up if you're going to do a transfer to an organization. If your church is going to give to an organization, is it a qualified donee in Canada? Yes, then that's easy. You're allowed to do it. So it's a little bit trickier though. How do you carry out your own charitable activities? Well, you can carry out your own activities by one, using your staff or volunteers to do so. So I think that's pretty easy. We do our worship, we do Sunday school, we have programs that are run by staff and volunteers. But did you know churches can also use intermediaries? But an intermediary doesn't need to be a qualified donee, but the charity must maintain direction and control of its resources if they're using an intermediary. So what types of intermediaries are there? Well, you might hire a company or a private contractor to do something, perhaps run your vacation Bible school if you have a lot of resources. You could enter into an agreement with a nonprofit organization in order to do your program, or you could pool resources with an organization to complete a project. The CRA has lots of details on what's required to use intermediaries, so this is just an intro into it, if that's what you're going to do. But the question is then, how do you maintain direction and control? Well, it goes into lots of detail to do this. The church, first of all, the church must make decisions and set priorities for the activities on an ongoing basis. So that includes the overall goals, how and where the activities will be carried out, who's going to benefit, and when it will begin and end. And then you're going to want to have things like written agreements, ongoing communication and direction, excellent record keeping with separate books from your intermediary, and making periodic transfers of resources based on demonstrated performance. When you actually read the government's documents about this, there's a lot of adjectives that they use, things like clear, complete, direct communication. And I kind of took those out of here because it seemed like it was overkill for me. But I bet that they've had lots of organizations that have given direction and they said, well, it hasn't been clear, complete, and direct. Like they really want you to maintain direction and control if you're using an intermediary. Now, where this most often comes up, or where I've heard it most often comes up, is particularly when it's related to foreign activities. So if you're going to support mission, oversee international mission, for example, most congregations will do it through a qualified donee, such as Presbyterian Sharing, Presbyterian World Service and Development, World Vision, any registered charity that works internationally. Many congregations will give them funds and then support their programs. But a charity can carry on its activities both inside and outside Canada. However, carrying its activities outside Canada often presents significant challenges and requires substantial ongoing effort. So this is what the CRA says, that before an organization begins carrying on activities outside Canada, the CRA recommends that it consider working with a charity or other qualified donee that has this type of experience. So it's just a heads up. We do have some congregations who are experienced and have the volunteers and staff who can manage handling, providing direction and control for work that with partners or for work that happens in other countries. But most congregations, you're going to want to work through a qualified donee. All right, so those are the basics, the charitable activities, the charitable purposes, both in Canada and overseas. The next question comes, is it a gift? When somebody gives to your congregation, how do you know that they've given a gift? And this isn't very important, particularly when it comes to receipting. The Canadian government requires that it be a gift in order for it to be receipted. Okay, I just have to, is there, just while I'm just catching up my notes here now, is there anything in the chat that I need to answer before we move on?
Oh, it's all good.
Okay, great. So is it a gift? Well, in order to figure out if it's a gift, there's a number of questions that you can ask. First of all, was there a transfer of property? Was the property given voluntarily? Did the donor relinquish control? Or did the donor receive an advantage? So if there was a transfer of property, if the answer is yes, that means that the donor can get a receipt. But that property needs to have been given voluntarily. So if that answer is yes, yeah, we can still move ahead and give the receipt. Did the donor relinquish control? The answer needs to be yes in order to give a receipt. And did the donor receive an advantage? Well, yes, you can give a receipt. You have to deduct the value from the receipt with some exceptions. And we're going to go into detail what some of those exceptions are in a few minutes. But let's look at each of these a little bit more in depth. So is it property? Sounds kind of easy, but actually there's many different types of property. So property includes cash. So your debit, your check, your credit card, your online payments, those are all considered property people can give to a charity and to a congregation. But they can also give non-cash gifts, or we also call those gifts in kind. So they may give capital property, such as equipment, land, buildings, stocks, or personal property, such as artwork, furniture, or clothes. They may also give life insurance. They may give charitable gift annuities or acquire charitable gift annuities to give. And then they can give ecological land and Canadian cultural property. So today we're going to look at all of the different ways people can give except for ecological land and Canadian cultural property, because there's really special rules that apply to those, and I'm not going to have time to go into those today. So just put that on your radar. If somebody is giving you some ecological land or Canadian cultural property, look into it some more. Give us a call, we'll help you. So let's look at these questions. Was it given voluntarily? That's an easy one to answer. Most people are going to say, yes, of course it was given voluntarily. But occasionally a charity will get, a court will order somebody to give to a charity as part of reparation for something that has been done. So perhaps some damage has been done. If it was ordered by a court, then it's not voluntary and you don't get a receipt for that. However, you don't need to worry if you're like, wow, how do I know if it was ordered by a court? You'll be notified if it's a court order. You'll get a letter that says this person has been told that they need to pay this much because of a court order. So if you know of any other circumstances about gifts not given voluntarily, please share in the chat and we'll share them with people at the end, because that was the only one that the CRA gave at their presentation example. So this question now, did the donor relinquish control? Well, if you give a gift and an undesignated gift, that's pretty clear that the donor relinquished control. They gave to the organization to do whatever they want to. But donors also have the choice to give a general direction or choose a particular program when they give a gift. And we call those designated donations. They cannot choose a specific beneficiary when they give the gift. Otherwise, you could be acting as a conduit. And I'm going to go into more details about that in a couple of moments. Also to note that when a designated donation, the charity is allowed to reallocate within the program when designated donations are made. And a registered charity cannot return a donor's gift if a project is oversubscribed, for example. So you need to have broad designations when you have your designated donations. So, or clauses that say what will happen if a project is oversubscribed. Let's go even a little bit deeper though when we look at this. So you can say, how is it designated? Well, there's two ways people can give designated donations to a congregation. First of all, the congregation may have some internally designated funds. So that's when the congregation invites people to give to the church. Say, for example, for an emergency appeal. Right now, PWS&D has an emergency appeal out for the relief of BC fires and floods. So you can say, we're going to collect the money for the BC fires and floods. Everything that we collect, we're going to send on to PWS&D. That's an internally designated fund. You need to do what you actually say you're going to do when you do that. People give to that fund, they're going to expect that you're going to pass it on. Now, something like the BC fires and floods, we know that there's going to be endless needs. It's very unlikely you're not going to be able to send all of the funds you collect. But let's say that you were collecting funds to send children to camp. So let's say you collected $5,000 to send kids to camp, and then really you only needed $4,000 because you didn't have as many kids to send as you thought you were going to have. So that's where you need to have a clause, or it's good to have a clause that you can reallocate to do something similar with the money. So perhaps you'll use the other $1,000 to run a VBS program or to have a day camp in March with the excess funds. You don't return the money to the donors because you get collected too much money. That's the important thing. So when it's internally designated, it's easier to reallocate funds. Now, but sometimes funds can be externally designated by a donor. And I'm sure that you've all had this situation where somebody's written a check and said, well, this is what this is for. I want to support the Vacation Bible School, or I want to buy a piano for the church. This money is to buy a piano. So if a donor designates it, you still need to follow the designations. It must fit your charitable purpose, and it must be accepted by the congregation. So it must be something that you're planning to do. So you can decide either to receive the gift or not to receive the gift according to the designations. Now, it's very important that the gift can't be directed to a specific person, family, or a non-qualified donee. If it is, you're acting as a conduit. Let's look at that deeper. So the next, So did the donor, what does acting as a conduit mean? A conduit is when the donor tells you what you have to do, and it doesn't fit what the congregation wants to do or with your congregational purposes. So for example, somebody wants to help their neighbor or family member, so they want to give to the church in order to get a tax receipt, but the congregation has no connection with the person and no process to help identify the need and no program. Let's say, for example, your cousin has cancer, so you want to give $5,000 to the congregation, so the congregation can give it to the cousin so you can get a tax receipt. It doesn't work with it like that. Then your congregation is acting as a conduit. Now, let's say that though the congregation is raising funds to help people who have cancer. You know that your cousin has cancer and you suggest that they could apply to the congregation to get support from the benevolence fund. You can support the benevolence fund, but you can't say this is specifically for my cousin and that then it goes to that cousin, but you can donate it, for example. So there's some nuances there, but basically in order to do it, you need to know that the church needs to have a program when they're helping people who are in need. They have to have a way that people are applying to the program and a criteria so that they are selected from. And they should be arm's distance length from the people who are applying. So if your cousin is coming to your funds to, wants to apply to a fund, a scholarship fund, or to go to camp or whatever the church is doing, and you're on the committee that's making the decisions, then you have a conflict of interest. So you need to step back for that decision about when they're participating in that. So that's sort of your basic ideas of acting as a conduit. Okay. All right, so returning gifts. Again, once you've given, you can't return the gift. So that would be another example, for example, and sometimes you get into this with mission trips. People have raised funds because they're going to participate in their church's mission, but they raise more than what their participation would cost to go to. Doesn't mean that gifts get returned to the person. It just means that it goes to help the overall mission of the church. Now, there is one situation. So if a gift is made by mistake, for example, you suddenly get a $4,000 gift online and you think, oh, this is wonderful. And then the donor calls up in a panic that they only meant to give for $40. It's an obvious error. So yes, you can return the excess gift that has been given. Also, as I said before, if it's determined that the gift doesn't fit your charitable purposes, it's best to return it before it's actually even deposited. So if you get a gift that's coming in, say on the offering plate, that it says it's for something, so maybe it's for the Metro Zoo, designated for that, and you're like, we don't support the Metro Zoo. You can choose not to deposit that check. You can return the check to the person at that time. If it gets deposited, or if it's an online donation where you really don't have a choice, it's already been given, you can return it to them before you receive it. So I think that's really a best practice. Something that can help with externally designated gifts is a gift acceptance policy. And churches can develop this. This just helps guide you to know what gifts do we accept or don't we accept before it becomes an issue or a question. Because you can't change the purpose once it's receipted, but having these policies will just help guide the cash counters or the treasurer, or, when you're depositing it, to know. So it might be, okay, these are the things that we will accept and these will, what we won't do. Also, you can in your gift acceptance policy include what happens if a fund is oversubscribed. That can be something that's helpful. So the other thing that you can do sometimes, if somebody comes to the church and really wants to make a significant donation and they've got a specific designation, so maybe they want to do it so to help the church hire a Christian educator, for example. And the Christian educator is something the church wants to do. They've been talking about it for years. This person knows they want to do it and says, I would like to make a donation of $50,000 that you can put towards the first year of hiring this Christian educator. You might want to develop a gift agreement then. And in the gift agreement, you could have background, you could state the purpose of and how the funds will be distributed. Is the $50,000 going to be used all at once, or is it going to be spent over 3 years and the congregation will match it or continue to raise funds? They might have things about oversight and reporting, a reallocation clause. What happens if it's amalgamated, if the church amalgamates or dissolves? That would be for a longer term fund. Sometimes we have people give large gifts that want to do for building and maintenance, for example. They've given $100,000 to be spent over 10 or 20 years. Well, then you'll need sort of what happens if this congregation amalgamates. Then you can have signatures of the donors and signatures of 2 trustee board reps. So that can be helpful. These don't have to be long. They can be 1 to 2 pages with just sort of, but it's just sort of, it's clear and it's concise and people know this is what I'm giving and why I'm giving. So if you want more examples of this, we do have online this great book for setting up legacy funds and endowments. And it contains sample policies and procedures to set up legacy funds and endowments, but it's the same principles that you could do for establishing gift acceptance policies as well as gift agreements. So feel free to look at this book, cut and paste, copy, plagiarize, do whatever you want with it to be able to customize it for your report. Okay. So advantages. Hopefully you're not overwhelmed yet, but now the next question was, did the donor receive an advantage? So an advantage is something like a dinner or a performance at a fundraising event. Luckily, we don't say that attending worship is an advantage for giving the offering, but it might be something like a promotional item. So a water bottle or a t-shirt or maybe a Bible, or it could be the use of property like sanctuary, like using the sanctuary for a wedding and somebody is giving a gift. So the easiest rule to remember, if there's no advantage, there's a receipt for a full amount. But if there's an advantage, you need to deduct the advantage from the receipt amount, as I said, with a few exceptions. So let's explore those. Well, in order to do the advantage, you need to determine first the value of the gift. So the advantage needs to be based on the fair market value of the advantage. And your fair market value is the highest priced in dollars that the property would bring in an open and unrestricted market. And for that, you need things like a willing buyer and a willing seller, a knowledgeable and informed and prudent, and they're acting independently of each other. But it's important to say, if you can't determine the fair market value, then you cannot give a receipt. So if there's no fair market value that can be determined, no receipt. Oh yeah, I am going to be looking, we'll be looking at how to receipt advantages and the examples when we get to the receipting section. So, tax credits. Before we get to different ways to give, the details of that and different ways to receipt, I'm just going to say a word on tax credits, because we need to pay attention. That's why we pay attention to our charitable status. We want to give people tax receipts where they can get tax credits. So maybe you'd like to know just a little bit more about how significant this can be for donors. A tax credit can reduce the donor's tax bill by almost half of the gift's value. Now, put this into your head no matter what you do. Most don't give to your congregation because of the tax credits. They might give because of tax credits, but there's lots of places, as we saw, that they can give to. There's many charitable charities, there's universities, there's hospitals, there's sports associations. They're going to give to your congregation because they believe that your congregation is helped in the mission of your congregation, in the ministry, because they're giving back to God, and they believe that your congregation is one way that God is going to use their gifts to further God's mission. But tax credits can help them give more. And so if you lose your charitable status, they might not be very happy, because they might be hoping on or depending on those tax credits that they can get. It's also important to know that the government of Canada encourages giving. That's an important thing. It's an important value in our society. Now, tax credits vary, and they vary by province. Anywhere from Alberta, which is the highest at 50%. These are provincial tax credits. And Ontario's one of the bottom at 40%. But the average tends to be 45 to 46%. So when we give examples to people across Canada, we're often using the average, using 45 or 46% as an example. Now, these results, it's important to note, don't include the 33% federal tax credit that's available to those with income over $200,000 in 2016 dollars. And it doesn't include where your marginal tax rate is at, or you need to, for example, to be able to use a tax credit, you need to have enough income in order for it to be worth it. But this is just sort of a standard rule of thumb that gives you an idea of how important these tax credits can be to some people. It's important to know that your tax credits in life, over that 75%, you can claim up to 75% of your net income reportable in any 1 year, except for Quebec. It's always interesting that there's so many rules except for Quebec. You can carry your tax credits, your charitable receipt donations, you can carry them forward for 5 years. So if you have a year that you don't have very much income, you might not want to use them that year, and you might want to use them the subsequent year. And also important to remember that spouses can split receipts. So really, when you get a receipt, it can have both spouses' names on it, or it can have one spouse's name on it. But in either scenario, the spouse can use the receipt of the other one. And just to give you an example, and this you can look at more detail or download later, take away from our notes. But here's just to show you the impact. So a person with a taxable income of, let's say, $100,000 donates $3,000. So the federal tax credit is 15% on the first $200 and 29% on anything larger than that, except for when you get up and your income is over $200,000 in 2016 money. And then you've got your provincial tax. So 10% on the first 200, for example, and let's say 21% on the remaining. So for the $3,000 donation, it really only costs them $1,550 to make the gifts, because they've got a tax credit that's valued at $1,450. So it's not insignificant. Now, it gets even larger, the tax credits in your death, and that's because you get your largest tax bill when you die, most often because all of your property is deemed as exposed. You've got both your final, your terminal tax return and the estate tax return that you may be filing. There are things like graduated rate estates, which stretch the savings to help you use all of your tax credits. So in a graduated estate, you can use up to 100% on your terminal tax return, your prior 100% on your prior year tax return, and up to 75% of your receipts on your estate tax return. So it's a great time to use the credits to make it possible to give. It doesn't have to cost your heirs as much as you think. And finally, there's definitely tax considerations around giving gifts of securities. Maggie can tell you how busy she is right now as people are giving gifts of securities to support their congregations. And that's because when it's given as a gift in kind, when a security is transferred to a charitable organization, there's no tax paid on the publicly traded, on the capital gains. So it's a great way to give more for less now or through your estate. And Maggie will show you some examples of that. All right, so ways to receive and receipt. And I'm really glad to get to this section because I'm going to be turning it over to Morris to talk about how we can give and receipt. First, we're going to start with cash gifts. So he's going to talk about ways to receive through the offering plate.
Karen, there's just one quick question here.
Yep.
Can you give a tax receipt if a ticket is paid to attend a fundraiser?
Yep, we're going to get up to that when it comes to gift in kinds. So I'm going to cover that in a few minutes.
Okay, on the offering plate, normally you would find you get cash, loose cash. Some people may put in checks, or some people may use your envelope that you have issued to them. And for example, on our congregation, in our envelope, we have multiple lines. We would have the general fund, Presbyterian sharing, we have our own mission fund, and we have a thing called other, but the use of the other has got to be approved by the session. For example, we have a benevolent fund that we use and we receive gifts for it. We have a food bank and we will receive gifts for it. Or it may be a PWS&D for relief programs, as Karen has already mentioned, in relation to the BC flooding and fires, etc. So there are a number of options that people can use when they put their money on the plate and in the envelopes. Next slide. When you receive the offering, it has to be counted. Now, again, I don't know if there are many congregations that are actually using or having 2 or more services in the morning. Maybe it has changed because of the pandemic, but I know we used to at one stage have 2 services. So we collect the offering plate after the first service. It would be taken to a secure room, and the counters would then do the counting there. Then when we had the second service, we'd have another offering plate that's coming along, and it would be taken down to the counters and they would count as well in the church. Counting and recording the church, I would again suggest that you use a locked room or a secure room when you're opening the offerings and recording them in your system. We require a minimum of 2 counters that are not related. And again, depending on the number of volunteers, you may want to schedule them that they do or count once every 4 weeks or for the full month, and then someone else comes along. Again, it just depends on the number of volunteers that you've got to do the counting on a weekly basis. And again, the other thing is that you need to ensure that the deposit is deposited promptly, and the offering is put in promptly. On the envelopes, when you're opening envelopes and you receive, there's no amount written on the outside of the envelope or designated on it, then I would suggest that it is defaulted to the general fund. And I would have the counter right on the amount that was received in the envelope and have it initialed by the counters on the envelope as well. So you've got a tracing of the amount that was in it and who opened it and received it in the count process. Many congregations, because of the timing again, they would take their money and deposit it in a night deposit box at their bank after the Sunday morning offering has been counted. But again, you've got to make sure that it's being securely deposited to the bank. I wouldn't leave it to one person to take it over. I would mean that we need to have at least 2 people going on the same thing. Next slide, please. The bank belongs to the congregation. In relation to depositing and timely deposits of offerings, I'm just going to read again from the Book of Forms, where it says, whether is a chartered bank convenient to the congregation, it is the duty of the treasurer to deposit therein without delay all monies received by him, her, and in a separate bank account identified as belonging to the congregation. It's not necessary that the treasurer actually makes the deposit, but the best of, if the 2 people that are counting, that they will take the deposit and put it into the safety deposit box. And nowadays, some bank branches actually are open on a Sunday, and so you can take it and make the direct deposit through the bank and get a stamp receipt for it. I think that's all I've got here.
Morris,
Yep.
somebody wanted to know, can the treasurer be one of the counters?
Yes. Yep. No
Great.
problem.
Good.
All right, hi, everybody. My name is Jim McDonald, and I'm going to be speaking about ways of receiving gifts, digital gifts, specifically. And in these times of distant worship, it's a good idea to make sure your congregation is able to use digital giving methods. So let's review each of these briefly. We'll talk about PAR, e-transfers, online giving, in-person giving using terminals, and mobile apps. So most PCC churches are now set up for pre-authorized remittance, PAR, and the United Church of Canada administers the program for the PCC, keeping costs low for our churches. It costs the church only 50 cents a donor each month, with a monthly maximum of $45 a month for a congregation. So a congregation can sign up even if they have only one donor who wants to give using PAR. To set up PAR for your congregation, you'll need to assign someone to be a contact person, and the PAR contact person sends the completed PAR forms and void checks with the explanatory letter to the PAR contact at the United Church in Canada, and there are instructions online for this. By the way, the United Church of Canada staff are working from home right now, so you don't mail PAR documents to the address listed on PAR forms. Instead, you mail them to the PAR administrator's home office using a special address you can find on the Stewardship website. So Interac e-transfer is the most cost-effective way to receive donations. However, some credit unions are not part of the Interac network, and some chartered bank branches resist giving churches access to receiving e-transfers. Anecdotally, we found that in order to activate online banking and thereby make it possible to receive e-transfers, many banks require the church to enable a debit card. I spoke about this last week. And there's a potential for problems of temptation with the debit card. So it's a good idea to be cautious about setting one up and maybe lock it up once the debit card is activated. So to determine who is responsible for managing incoming e-transfers, when the e-transfer email is received, it can be forwarded to 2 people, perhaps the treasurer and the envelope steward, to record the gift for receipt. Having 2 people involved helps safeguard the assets of the church and the reputation of those involved. It's a best practice to use an official church email address to receive the gift rather than a personal email address. You might want to use or create a specific email address just for e-transfers so that only the people who are responsible for receiving these gifts have access to it. And keep copies of the emails informing of the transfer in your financial files with other donation records. Another best practice is to set up your account so that e-transfers are automatically deposited if the bank will let you. It makes the transaction much more secure. And be sure to get the full name and address of the donor so you can issue the charitable tax receipt. Remember that receipts go to the person who sent the funds. So donors must send the funds from their own bank accounts. It'll be clear who it came from.
Jim, somebody I just wanted to know, why do you have the no Gmail or Hotmail suggestion in there?
Because if somebody was to mistype, the money will be sent to the wrong person. Now, of course, if you have, well, actually, even with auto deposit, that doesn't help you if they've sent it to entirely the wrong person. So with a Gmail account, that's much more likely to happen. Whereas if your email address is secretary at Knox and yourtownsname.com, that's just never going to go to anybody but the right person. So it's just safer that way.
Okay, thanks.
Okay, so we'll talk about online donation forms now on your website. They make it possible for people to give online 24 hours a day and 7 days a week. And so it's a really good option for people who've moved away from your congregation or are worshiping online, but still want to give. And most services offer easy monthly giving. We once had a person who wanted to donate monthly to a former congregation. They had e-transfers, but no donation form on their website. And once the church learned someone wanted to give that way, they were quick to adapt. The donate button on your website leads to a form that is either embedded on your website, or if you have the necessary security protections, or links to a proprietary form set up for your church on the services website. Now, although there's a few more services out there, the Stewardship Department has found that either CanadaHelps.org or Tithely best serve the majority of congregations, and I'll explain the difference between them. So CanadaHelps.org is a foundation. So the donor is considered a donor of Canada Helps. Now, Canada Helps collects the donor information and issues the tax receipt, and the church merely receives the funds. The donor has to give permission for their personal information to even be shared with the congregation. Now, most do, but the church needs to claim its account, to claim its profile, to learn who gave the funds. So mostly smaller churches are really happy that the tax receipting responsibilities are taken care of, knowing that they can get the donor's information and send a thank you note. But larger churches tend to prefer to have more control over their donations. Tithely, on the other hand, is a payment system. So for churches, the experience is more like online banking. With Tithely, the donate button on your church website is a tool for your church to receive the funds. The donor is the church's donor, and your church collects all the contact information and provides the tax receipt. Now, both services do not charge a setup fee. For single donations, CanadaHelps.org charges a fee of 4% per transaction, but if your church claims its charity profile on CanadaHelps.org and sets up a customizable donation form, the fee is reduced to 3.75%. And there's different rates for monthly donations. Tithely charges 2.9% plus 30 cents per transaction. But PCC churches get a special rate of 2.75% plus 30 cents per transaction. For Visa, MasterCard, and debit transactions, the fee for American Express is higher. So how do these fee structures compare? For a gift of less than $30, CanadaHelps.org's transaction fee is lower than Tithely's fee. And for any gift over $30, Tithely's fee is lower. However, the difference in the fees isn't that great. For instance, a transaction $20 gift is a 75-cent fee for CanadaHelps.org and 85 cents for Tithely. A fee for a gift of $100 is $3.75 for Canada Helps and $3.05 for Tithely. So the more important difference is what I was talking about before. Do you want to be working through a foundation and the donor becomes their donor, or do you want to take care of it yourself? And that would make it better with Tithely. Even if your church chooses to implement Tithely on your website, you should still claim CanadaHelps.org, your profile there, because people can still give to you through CanadaHelps.org, whether you claim your profile or not. You'll save on your fees and you'll be able to tell who gave, so you'll be able to give a thank you note. And I've helped dozens of PCC churches set up these tools, so do feel free to contact me. I'm happy to help you set them up. They can be complex and I make it easy, believe me. Okay, let's take a look at apps. Now, Tithely and other church management systems offer the ability to create an app, a little icon on a mobile device for your church. And if your church has or wants to attract a community of people who prefer to work with mobile devices, an app offers tools through an easy to install icon on cell phone or tablet. With the Tithely app, for example, not only can users give a donation, but they can also take interactive sermon notes and listen to messages on the go, access small group material, check the prayer list, engage with your real-time church news feed, and more. But because it's more than just about giving, you really need to have the rest of the church staff on board before implementing an app. It requires regular contributions of fresh content to remain relevant, or just dies on the vine. Donation. Okay, so ways to receive through terminals. This is something that I was really excited about just before the pandemic. And of course, we're not meeting in person as much, but it's just a terrific way to give. And really, I think important in the future. Nowadays, because fewer people carry cash. In a recent survey in the US, more than 50% of people said that they carry cash only occasionally. I'm sure that's equally true in Canada. So as a consequence, spontaneous in-person giving is made much more difficult because people often make all their purchases with their card or mobile device. So a credit card terminal is the answer here. There are 3 competitors in the space right now: Square, Stripe, and Cloverflex. And Square is the least expensive of the 3 for a church. If the terminal is connected to the web and the transaction can be verified in real time, fees charged for debit card transactions are only 10 cents per transaction. Now, credit cards cost more, as you can see, but the ability to tap makes these devices infinitely easier than setting up a computer with a copy of your online giving form in the narthex and expecting people to fill stuff out, instead of going to coffee time. These devices can store your entire membership list, so an usher can quickly select the donor's name from the list, and the donor can tap, give, and off they go to get coffee. So the process is still a little too slow for giving during the offering, but it's rapid enough to be considered painless and convenient by the donor. So donation tracking. In our recent survey of over 400 PCC churches, we asked how did they track donations? And nearly 40% are still using pen and paper or Microsoft Excel, but the rest are either using their accounting software like QuickBooks or dedicated donation tracking tools that can help congregation track donations and communicate with donors. For instance, 14% of PCC churches report using Coopersoft's donation software, and a few churches are using offeringhelper.com. And those that use Offering Helper are very enthusiastic, I can tell you. Lots of really good comments. So most of these tools will issue tax receipts and generate reports. And church management systems offer you may know about church management systems. They offer additional features that also help manage every aspect of a church, like membership data and children's check-ins and event management and small groups and all kinds of things. However, church management software serves little purpose without a lot of parishioners to serve and a lot of people to manage it. And as such, it's designed to serve quite large churches and comes with commensurate costs. So I think the more really specific to donation tools are probably more appropriate for most of our churches. So I'm going to hand it over to Karen to talk about receipt basics.
We're trying not to talk faster as we get closer to 3 o'clock. So I know I can tell you this is going to go right till 3:15. But let me talk about receipt basics and what you need. Hopefully you're finding this interesting. Next. So as we've been talking, only qualified charities or qualified donees can issue receipts, and donors can't claim a tax credit without having their receipt. In fact, I know that many of our congregation members have to every year send their hard copies of their receipts in because congregation members tend to be some of the highest givers in our Canadian society. So people just, government, I think sometimes just can't believe that we give that much to charity, but we do. So when you're doing this, it's important to know that the congregation should issue the receipts by the end of February or earlier. Last week, we talked about that it's not a CRA rule that it needs to be issued by February 28th, but it's definitely a best practice as people start to file their income taxes in March. And so you want them to have their receipts when they're ready to file. Otherwise, they can get annoyed with you. And who wants to have an annoyed donor? Remember, this is a joyful process. So what should your receipt look like? Well, the design and the format is actually up to the congregation, but it must include the following information as prescribed by law. So first of all, we have our static elements. No, that was go. Yep, we have the static elements. So these are your charity and the CRA details. So you need to have this statement on it that says official receipt for income tax purposes. You need to have the name and address of the charity. You need to have the charitable registration number, the serial number of the receipt. So every receipt needs to have its own unique serial number. You need to have the place or locality where the receipt was issued. You need to have a signature of an individual authorized by the charity. So that might be your treasurer, for example. And you need to have the name and website address of the CRA, which they changed, I think about 1.5 years ago, they updated that. So this is the latest one as far as we know. It's a lot of details to include, but these are the static elements, and they're the ones that every receipt are going to have on it, and they don't change. So a lot of people will have their receipts with these details printed on it, and then they will have the next slide, the variable elements, and they will print those on each receipt. So the variable elements are the date that the gift was received. Now, if it's a consolidated receipt, it needs to be the year. And if it's a one receipt per gift, it can have the day, month, and year on it. So it can be very specific. It needs to have the day on which the receipt was issued. So for that, it should have the day, month, and year. Then the full name and address of the donor, the amount of the gift, the eligible amount of the gift, and the value and description of any advantage. Remember, I said that we'd get back to talking about advantages. But let's look first just at some samples of an annual consolidated receipt. So this is a little bit small. We're going to look at the details, but I wanted to show you this. This is the PCC's annual consolidated receipt. You can see that we have two of them. One is on top and one is on bottom, and they're the exact same. So everybody, when they give to the PCC, gets 2 copies. So when they can cut it in half and send one in with their taxes to the CRA and keep one for their records. But if we go to the next slide, we can look at it more detail and see what it actually says. Okay, so your annual consolidated receipt, you'll see that this got at the top, we've got the logo and the name of the Presbyterian Church in Canada. We've got the address and the contact information, and we've got that charitable registration number, which was required. We have the statement, the official donation receipt for income tax purposes. We have a nice, on the right-hand side, we have a nice little thank you that comes from the chief financial officers, and it says that that's an authorized signature. So we've got Oliver's signature there. And then we've got the Canada Revenue Agency at the bottom right, and their website that is there. So the only variable that we changed on the right-hand side is the name. So we'll say, for example, Dear Jane, Dear Martha, Dear Stuart. Now in the center, this is the data that changes. And so it's easy for us to print on the variable data on each receipt. So you can see at the top, we have the receipt number right below the official donation receipt. We've got the amount received. And then we've got the date received. So we put in the date range. So it's everything from January 1st, 2021 to December 31st, 2021. The date that it was issued, this one was issued February 17th, 2022. Well, just so you know, this is a sample receipt. It's not a real receipt. And the issue location was in Toronto, Ontario. And you can see this was for the Reverend Jane Dean and where the mailing address that it was sent to. We have it designed so that when it's folded in 3, the mailing address can fit into a window envelope. And that way we don't need to reprint the address on the envelope. We don't put any fund details on our annual consolidated receipt because the PCC has so many funds and it would take up too much paper. So it's just if it's given to the PCC. So this one would include donations for PWS&D, for Presbyterian Sharing, for Canadian ministries, to support Indigenous ministries, anything that was given through the PCC. So if you have people who've given to your VBS and to your music ministry, for example, as well as their missions and their undesignated, you don't need to list all of that on your annual consolidated receipt. You can just say that it was given to support the ministry of the church. But then there's also the next sample that we'll just look at is the one receipt per gift. So in this one, it's if every gift that somebody makes, you give a receipt. And it's best that you really are either doing one receipt per gift or an annual consolidated receipt. Because if you get an annual consolidated receipt, for example, it wants to know that it covers all of the gifts that have been given. And it just is odd if you've got some that are one receipt per gift. This is for cash gifts. If you're giving things for a gift in kind or something like that, then it has to be an independent receipt because it requires other information on it. But most of your cash, it's best if you can do either your annual consolidated receipt or your one receipt per gift. Now, some of you though will say, well, our online gives the receipt, it automatically generates, and then we have one receipt per gift. We do an annual consolidated for the envelopes and cash and all the other special gifts. I think that that's probably okay, but it's good if it's specific. So if this says, these are for your online donations, then people can sort of differentiate and know, oh, the reason I've got 4 online donations is because I've done that. Though you may also want to take your online donations and include them with the annual consolidated receipt. That's what we do. If somebody gives online and somebody sends to the PCC, they're going to still get it on one receipt at the year end. Okay, so just remember, when you're on your receipt, when it comes to the details of the person or business, whoever gave the cash or property is the one who gives the receipt. So you can't give in somebody else's name. From time to time, congregations will get a check, for example, this is the money that I've collected from someone. And if they include a list of all the people with their names and addresses and needed on a receipt, then the treasurer could give receipts for all the people on the list, but they need to attest this money actually came from the people on the list. That's really what is important. And then the receipt must have the donor's resident address. So no address means no receipt. And it should be their home address if it's an individual and a business address if it's a business. Okay, so we had some people who were want to know more about advantages. So let's look at what we do when we're receiving an advantage. So let's say that somebody has given a $10 donation, but they're given a $2 water bottle because it's an event that you're doing. Now the $2 water bottle, it might actually have only cost the church 50 cents, but the fair market value of the water bottle is $2. So you're going to deduct the $2 from the $10 donation and you're going to give the $8 receipt. So that's the simple advantage, but as I said, there's exceptions. So let's look at the exceptions. Next. So the next one is the intention, the advantage of the intention, the intention to give threshold. So the value of the advantage has to be less than 80% of the gift. So for example, somebody gives a $100 donation and they're going to participate. You've sold tickets, so they're getting a dinner worth $90. In that case, the dinner is 90% of the donation, so you don't get a receipt. However, if it was $150 ticket with a $90 dinner, then the dinner is only 60% of the donation. So they can get a receipt for $60, which is 150 minus 90 from the charity. So what will your receipt look like? We'll go do that. So here's the example of the receipt. You can see it's very similar to our regular annual receipts, but it's got the date on it and it's got the advantage. It's got the amount received, the advantage, and the eligible amount. So here we go. And then when the date issued. So, and then it says that the advantage was a $90 dinner. So $150, $90 dinner, the eligible amount of the gift is $60. So it's a $60 receipt. Okay, but there's still a little bit more exceptions. If the advantage does not exceed either $75 or 10% of the gift, whichever is less, then the advantage is not deducted from the value of the gift. Now, this doesn't apply to cash or near cash equivalents, or if it's the core element of a fundraising event. But let me give you an example because I think it'll be a lot clearer with an example. So let's look at the examples of the de minimis rule. So a donor gives $200 to your congregation and you give the donor a t-shirt worth $15. The t-shirt is worth less than 10% of the $200 gift. So you can then issue a receipt for the full $200. It's immaterial, the t-shirt, to the gift. But let's say the donor gives $50 to your congregation and you give the donor a cross keychain, which is valued at $10. Well, that's 20% of the gift that they've given. So it's more than 10% of the value of the gift. So in this instance, you're going to deduct the $10 from the $50 and issue a receipt for $40. But let's say the donor gives $2,000 to your congregation. And so you give the donor a bottle of wine, which has been valued at $100. Well, the wine is less than 10% of the gift, but it's worth more than $75. So that means that you have to deduct the wine from the gift. So then you issue the receipt for $1,900.
So we may want to stop for a moment. There's been a couple of questions. Heather, do you want to take that? Okay, I will. So there's a couple of questions here. One is, so for the qualifying donation, if the donator decides to designate an amount for the pastor's spouse because she is studying a religious program, how is this dealt with and what makes it or makes it not a legitimate donation?
Okay, so the person can give a donation to the church if the church has a donation to help Christian education or to help people continue their studies. But that fund should be open to people, the pastor's wife, as well as other people in the church. And then the person could apply for funds from that to receive that funds. At least that's what I would say. Then the pastor's wife could get support from the funds. But say that they gave $5,000 to that fund and the pastor's wife course cost $1,000. The extra $4,000 is a gift to the church. So that's available for anyone to apply for, to use for the same purposes. Morris, do you have any ideas, or Oliver, on how that would work? I mean, you can't say when you give it, you can't say this is for the past, this is specifically for the pastor's wife. Then it would be you're acting as a conduit, and it's really too designated.
I think you just got to watch that you're not acting as a conduit there.
Yeah, exactly.
Okay, there's another question. Our retiring minister wants to set up a scholarship for the local high school with donations and disbursement coming through the church bank account. The church will contribute a starter fund, and then we hope that others in the community will donate. Is this a feasible plan?
It sounds pretty good to me. I mean, it falls within your charitable purposes. It's an idea. I mean, where the ideas come from doesn't matter. So it's okay that it's an idea that's come from the retiring minister. And it sounds like as long as the session or the congregation agrees with that this is an important ministry, I don't see why the church couldn't set it up. But they need to be sure that it's a program that they have and that they're maintaining direction and control. So for example, if the ministers, like, they can't set it up on the side and the church doesn't have any direction or control about it. So they need to, create a committee who's going to receive the applications for the scholarships and what's fair and how do we promote it. But I think it sounds like that would be a fine program. Anybody else have thoughts on that? Okay.
Okay, a couple more. Just a comment that it was quickly skipped over, that companies are legal persons, so they're allowed to give charitable donations and receive tax receipts, which they can use.
Yes, that's right. So it can be a business or an individual who gives a donation. So, and if it's an individual, then you should give the receipt to their home address. If it's a business or a company, then you can give it to their business address. So, yeah.
Okay, and then if a person donates $500 worth of flowers for the church's landscaping, can they get a receipt?
Ooh, that's going to come up in gifts in kind. So why don't we keep moving, and I'll keep going, and then we'll come to questions in a bit more if there's more. All right, so now we're coming. It was a great segue. Ways to receive and receipt non-cash gifts. And I just need to, catch my notes up with this too. Okay, so gifts in kind. If somebody donates $500 worth of flowers for the church landscaping project, can you give a receipt? Well, you need to be able to determine the fair market value. Remember I said earlier, if you can't determine the fair market value, no receipt. Well, if they've got a receipt for the $500 worth of flowers, you can know that is the fair market value of that good. But if you're giving something like a book or a piece of art or a chair, if it's property under $100,000 and they haven't just purchased it, it needs to be assessed. What's the fair market value? Well, as long as it's under $1,000, a competent person with sufficient knowledge can determine the fair market value. They can be connected to the charity. It might be, say, for example, somebody wants to donate a car to the church. And so you've got somebody who owns a car dealership. They could assess, and it was just a cheap car under $1,000. So it's, let's say, $850 car. they could say, yeah, this car is worth $850, and you could issue the receipt. And then you could drive it for 6 months and send it to the dump. But if it's property over $1,000, you need to have a professional appraiser not connected to the charity or the donor, not connected to the charity or donor, to determine the fair market value. So let's say that somebody is donating a car of $5,000. It's better to go to an outside car dealer and get them to appraise it. How much is this car worth? So they can then write it down for you and you can issue the receipt for that amount. So when you, there's another, even an exception to this rule. That's called the deemed fair market value. So the deemed fair market value is the cost to acquire the gift. And the deemed fair market value must be used if the donor acquired the gift less than 3 years before donating it, or the donor initially acquired the gift as part of a tax shelter arrangement, or the donor acquired the gift less than 10 years before donating it, with one of the main purposes being to give the property to a qualified donee. Basically, I think the government doesn't want you making money that you're not claiming income tax on by buying a gift at a very low value and then selling it to the charity for a high tax receipt. And so that's why they've got these rules on there. Let me give you an example. Next. So, and this is because it was a recent type of gift, a donor buys communion tokens for $50 on eBay, and then 6 months later donates the work to the Presbyterian Church Heritage Center. The tokens are appraised at $5,000. How much do you issue the receipt for? Unfortunately, because it was 6 months, they have to issue the receipt for $50. So tell that donor to hold on to those tokens for 3 years, and then they can donate them and get the receipt for $5,000, except if the only reason they acquired the tokens is to donate them to the church, they have to hold on to them for 10 years, and then they can donate them and get the receipt. Now, the question you can say is, how do I know when the donor acquired the communion tokens? Maybe they were passed down from their grandfather. Well, that's easy. Ask. You've done your due diligence. The donor is supposed to be honest with you. So as long as you say, have you had this for longer than 3 years? Yes, it's been in my family for 25 years. No problem. Have it appraised and issue the tax receipt. Now, here's another question though. Can I donate a service? So let's say that the person who's donating your $500 worth of flowers is actually a landscaper. And so they want to donate $500 worth of flowers and their landscaping services, which are worth $2,000. Let's just say. Well, service is not property, so it can't be donated as such as a gift in kind. But there are some exceptions. So the gifted materials, which are property, could be receipted. So the $500 in flowers, we've already determined that could be receipted as a gift in kind. Or the service provider can voluntarily return a payment as a gift. But in order to that, you need a paper trail. And so, next slide. And so if, for example, here's one with the Joe's Carpentry, where Joseph's Carpentry donates shelves for the church library. There's building materials worth $200 and labor worth $300 with a total cost of $500. You can either give a receipt for $200 for the building materials, and he can donate his labor of $300, but he doesn't get a receipt for it. Or you can pay the invoice. Joe writes the check for $500, or you write Joe a check for $500, and Joe writes a check back to you for $500 and receives the receipt for $500. Joe reports the $500 as income. He can deduct the building materials from his income. This creates the paper trail and he pays the tax. And because of this, you can't just endorse a check. You actually need to write him a check and he needs to write you a check back, or send him an e-transfer and he sends you an e-transfer, whatever. The money actually needs to exchange hands. Okay, we are getting close to the end, but gifts, certificates and gift cards. If a gift certificate or gift card is donated directly by the store, so let's say that you are running a food bank and Sobeys is giving you a gift certificate or a gift card for $500 worth of groceries, and they want a receipt for it, you can't give them the receipt for it until you've actually redeemed the gift certificate. But if somebody in your congregation buys $500 gift certificate from Sobeys and then gives you the gift certificate for the food bank to use, you can give that person who's considered a third party the receipt for $500. And that's because they've actually spent $500 of their money that they've already paid tax on. And so they can get the receipt. Whereas Sobeys, if they give you the gift certificate until you actually use the gift certificate, they haven't really given the gift. So they could be getting a receipt and then not actually giving anything if you lose the gift certificate. So that's the difference there. So when you go to do your gift in kind receipts, you need a brief description of the property, which is transferred to the congregation. You need to have the name and address of the appraiser and the fair market value of the property. So we can see with this one, it says the communion tokens and how much they were valued for. In this instance, it was over $26,000. I had no idea that communion tokens could be worth that much, but that was, well, this receipt is not the actual receipt. That is the actual value that they were appraised at. So there you go. And I think, yeah, I did show an advantage. Okay. I'm gonna turn over the planned gifts to Jim, and I know that we're going over time once again, but we do have lots of good information. If you need to leave us, we are recording this, and so you can come back and finish the recording. But I think we'll keep going and finish the material for you. Go ahead, Jim.
I think it's actually Maggie Leung who's going to take this over.
Oh, you're right. Sorry, Maggie.
Glad that I'm still here. My data is still working. So greetings, everyone. My name is Maggie, and we'll talk about the legacy and planned gifts. There are a number of legacy and planned gifts that the PCC is offering: the securities, annuities, insurance, bequests, gifts of residual interest, charitable remainder trust. So we'll focus on a number of them today. So let's talk about securities. And yeah, I thought I'm just frozen. So securities, when people are selling appreciated publicly traded securities on a recognized stock exchange, the donor will be taxed on the capital gains. But if they give the shares directly to a charity, there is no capital gain tax. Let's take a look at an example on the next slide. So this donor has securities that worth $50,000 to give, and the securities worth $20,000 when the donor bought them. That means the stock has appreciated in value of $30,000. Now the donor is at a marginal tax rate of 46%. Let's look at two scenarios. What if the donor sells the shares and donates the proceeds? So the value of the shares is $50,000 and the capital gain is $30,000. And the donor will be taxed on 50% of the capital gain at his marginal tax rate. So that comes up to $6,900. And then the donor thought, okay, I will save this $6,900 up and to pay the capital gains tax later and donate the rest to the church. So that the gift comes up to $43,100, and he received the same amount on the tax receipt. And with the tax receipt, this donor gets an income tax credit of 46% of it. That comes up to $19,826. And the cost to make this gift becomes $30,174. What if the donor donates the shares as a gift in kind? What will he get, and what will the church get? Now, the same value of the shares is at $50,000. Capital gains is the same, but the donor will not be taxed on the capital gains tax. That becomes zero, and the whole amount of $50,000 goes to the church, and the donor in return gets a tax receipt of the same amount. So it's a bigger gift to the church and a bigger tax receipt for the donor, and a bigger income tax credit for the donor too. That comes up to $23,000. The cost to make this gift becomes 27,000. Isn't it mind-blowing to give shares as a gift in kind, and the donor gives more and with a less cost? This is a win-win situation for everyone. So some congregations we know have the ability to process stock gifts. They have a stock broker working with them, but not all congregations can do that. In any case, the national office is happy to help to process stock donations for our congregations, and we are not charging anything. So we accept gifts of securities for any congregation or ministry that can be assigned to Presbyterian Sharing, PWS&D, Indigenous Ministries, or others. And let's talk about the process, how it works. So when a donor plans to make a stock donation, they can fill out a gift of publicly traded securities form that's available on the PCC website. And once they completed this form, which they provided their donors information for receipt purposes, and where they want to give this gift to, it can be a congregation or other ministries. And they can send a copy of this form to their broker, because on the form, the broker will also find the PCC broker's account information so that they know where to transfer the shares to. And another copy of the form will go to the national office so that we know the stock gift is on its way and we'll watch for it. And once that stock gift came into our brokerage account, our stockbroker will sell the stock shortly after that. And the PCC will issue a charitable tax receipt that is based on the fair market value on the day, that is the closing market value of the day that the broker received the stock. And on the receipt, there will also be the stock name and the number of shares, so the donor can use it without paying capital gains tax. And the sales proceeds less the brokerage fee charged by the PCC broker will go to the beneficiaries. Now, when the money is ready to be forwarded to a congregation, and usually we will contact the congregation's treasurer and notify them there is a gift, because when the money goes to them, we can send electronic fund transfer, and sometimes it can be in a check, but in the form of electronic fund transfer, sometimes the congregation may not know where it comes from. So we'll write a note to the treasurer letting them know there is a stock gift to them, go through the PCC broker, and there will be some instructions about this gift that they need to know as well. And you know that stock price fluctuates. So sometimes the stock sold amount may be different from the time that the stock is received by the PCC broker. Now, on the screen, you can see an example of a stock receipt. Now, you can see that is a gift in kind of securities, and the receipt, the gift amount, and also the unit of the stock with the stock name and the date that is received. So before we go to annuities, are there any questions?
There is one question.
Okay.
What is needed or required for record keeping for electronic donations received? For example, transfers throughout the year.
Karen, would you like to take that question?
I'm just wondering what Morris would say. I would say if you're receiving electronic transfers, there's going to be some type of proof of that transfer. So your bank statement, or often you're going to get emails. So I would print out, for example, if you get emails that say this amount was deposited into your account, and then I would put them with your where you keep your envelopes, for example, or where you keep the other backup for your donations. So the thing with electronic online donations or e-transfers is that there is going to be a paper trail somewhere. You just need to find it and print out the proof. And you need to have then also the proof of how that you know this comes from that donor. So e-transfers, for example, might come from karenplater@gmail.com. So then you can say, oh yeah, that's a unique email address. That's what it says on the e-transfer. I know that that belongs to this person, and here's her home address, and this donation has come from them. So we are going to cover that more next week when we're doing, when we're doing in January, when we're doing reporting and how to keep financial statements. We'll cover this again. I think we'll keep going, and then we're going to save the rest of the questions until the end, just so that we can finish up.
Okay, sure. Let's go to the next slide about annuities. So this referred to the charitable gift annuities, which is an irrevocable gift made to any PCC congregation or ministry. And in return, the donor gets a guaranteed stable income for life. This is an ideal gift vehicle for people who are 60 years old or older and who would like to leave a gift to the church after they die, and they also receive a steady income during their lifetime. And PCC provides these charitable gift annuities to benefit any congregation or ministry. And this charitable gift annuities is self-insured by the PCC, and we are a member of the Canadian Charitable Annuity Association, which works with its members to set standards, self-monitors the ethical and technical aspects of the annuities. There are two types of gift annuities. Is a single or the joint. The single life annuity is for an individual donor, and joint life annuity can be between spouses and two siblings. So that means when one annuitant died, and the second annuitant will continue to receive the annuity payment until both of them die. The remaining amount of the donors in the donor's annuity account will be forwarded to the designated beneficiaries. So when the donor acquired a charitable gift annuity, they will get a one-time charitable tax receipt for a minimum of 20% of the total annuity. And this percentage varies with the age, when it was acquired, and the size of the gift. So annuity is another great giving vehicle. Let's look at the story of Mrs. Kelly. So Mrs. Kelly bought her gift annuity in 1994 at $10,000 for the PCBC. When she died 15 years later, she receives almost 11,000 total payments, which is 87% of them is tax-free. And she is also able to leave a legacy of 75,000 for PCBC. So in that case, you know, the initial cost or the initial gift from Mrs. Kelly is 10,000, and she received a payment that is more than 10,000, and she is still able to leave a legacy to PCBC. Isn't that amazing? So let's go on to see where to start. So in order to acquire a charitable gift annuity, and the donor has to be 60 years old or older, and the minimum gift is 10,000. So we will start with an annuity quote, which we collect the donor's date of birth and the amount they wish to donate. This quote is generated by a program designed by a group of actuarial experts. This quote is actually forms the foundation of the terms on the gift annuity. And you can see on this quote, this for John, and he is 85 years old, and his donation amount is 50,000, and he gets a one-time donation receipt of 17,400 and more, and at an annuity rate of 7.34. And so the donor can choose how often they receive the annuity payment. And in this case, John chose semi-annually to receive the payment semi-annually. And the other options will be annually, quarterly, or monthly. And on the quote, that you will notice that the percentage of the tax-free portion and the taxable portion is listed. So I recently received a question from a donor. Oh, will my charitable gift annuity expire? And do I need to renew it? No, you don't. So once a donor acquires a charitable gift annuity, and the terms stays forever. So the donor is guaranteed the payment amount and the frequency for life. So when the donor dies, the money remaining in their annuity account will be sent to their designated beneficiaries. And I think that's all for me. And I'll turn it to Jim.
Yeah, I'm just going to talk about insurance. Let me just move the slide forward. There we go. And with insurance, there's four ways to give, three particular and one that's kind of unique. The first one is a donor can transfer the ownership of an existing policy. The church will issue you an immediate tax return for a portion of the policy's cash surrender value, if any. And if you continue to pay annual premiums after transferring the policy, the church will issue regular tax receipts, and no tax receipt will then be issued to your estate. So you can use the receipt for this year's income tax return, up to 75% of your net income, and carry forward any unused portion for up to 5 years. Note, though, that there may be a tax liability when you transfer ownership of the policy to the church. It depends on the policy. So if you already have a policy, you can change the beneficiary to the Presbyterian Church in Canada or your congregation. And because this is a revocable gift, now you could change your mind. We can't issue you an immediate tax receipt, but your estate will be issued a receipt for the entire amount of the life insurance policy in the year of the gift is received. So this receipt can be used on your final tax return up to 100% of your net income, and with unused credits applicable up to 100% of your net income for the previous year. So you can purchase, the third way is you can purchase a new policy with the church as owner and beneficiary, and the church will then issue a tax receipt for the annual premiums you pay after transferring the policy. In this case, no tax receipt will be issued to your estate because you benefit from the tax relief during your life. This is a very creative way for those who are younger and may not have substantial assets to prepare to leave a significant legacy to the church. Now, the fourth way is an interesting thing. It combines life insurance with some other planned giving vehicle. The best example being you could use the extra income you receive from a charitable gift annuity, which we just found out about, and use it to make payments on a life insurance policy. And you could use this insurance to increase your legacy to the church or provide a substantial inheritance for your heirs, either way. So let's look at an example of an insurance gift. Ms. Lee, aged 45, wanted her congregation to receive a significant gift to help replace her annual givings to the church after she passes away. However, she needed to keep her current capital assets intact. So Ms. Lee learned that she could get a term to 100 life insurance policy of $150,000 that is guaranteed to be paid in 10 years. And as a non-smoker, her policy will cost about $3,000 per year. However, because of the charitable donation receipts she received, Ms. Lee was able to provide a substantial future gift of $150,000 for her church for a net after-tax cost of only $16,200. So this is a tax credit receipt for an insurance premium, and you'll notice that it indicates that the gift was in the form of an insurance premium. And the value of the premium paid. That's as difficult as it gets. So now we want to talk briefly about legacy and major gifts. So now that the most flexible and usable legacy gifts come with no designations, no restrictions, and no conditions from the estate of the donor, the congregation decides how is best spent. Should your church receive a gift with restrictions, by all means, look before you leave. Don't deposit the check or accept the money until you can agree to meet the conditions demanded by the gift. Now, bequests from estates or gifts from third parties with conditions once accepted cannot be changed. So if you want to avoid too many designations, then create one or two internally restricted funds and encourage people to give to those funds. Don't have too many of those funds, just a couple, one or two. And such funds help alleviate donor fears so they're less likely to restrict themselves. Meanwhile, any conditions or restrictions that are set up internally can be changed by the originating and approving body as circumstances change. So include internal restrictions in the policy and let people know under what circumstances they can be changed. It allows you to basically market your legacy fund giving by creating these funds. Now, there are many ways a donor can make a charitable bequest. Some of the types of bequests include a general bequest, which directs that the church will receive a designated sum, a percentage request that states that church will receive a predetermined percentage of the donor's estate, let's say 10%. And the advantage of a percentage request is that it keeps the gift in line with the value of the donor's assets over time. A specific bequest directs the church will receive a specific piece of property, such as a piece of real estate or the stock from a specific company or some other specified property. But it's important to remember that a specific bequest can only be satisfied with the actual property that was designated. So if that property has been removed from the estate, the church will likely receive nothing in its place. A residual bequest designates that church receives all or a portion of whatever remains in the donor's estate after all named beneficiaries' debts and administrative fees for settling the estate have been paid. The advantage of a residual bequest is that the donor's charitable intentions will not jeopardize the amount the donor wants to bequeath to their primary heirs and beneficiaries. So the disadvantage, of course, is that there may be no residual left over for the charity. But for those who are a little nervous, a residual bequest is a great way to do it. A contingent bequest, as the name implies, this bequest is contingent on some event. Usually the donor might make a primary bequest for a relative, for example, a spouse or a child, with the contingency if that relative should predecease the donor, the bequest would be passed on to the church instead. So as a church, remember to always review your gift acceptance policy before receiving and providing a tax receipt for a major gift. Those of you who wish to plan a bequest or help someone else who would want to plan a bequest, there's specific wording for congregational bequests at presbyterian.ca, especially with regards to the wording about how to treat the bequest in circumstances of amalgamation and dissolution of congregations and how designation might be reallocated if needed. So this receipt example indicates it's a bequest made out to the estate, and the thank you message is slightly changed so that it reflects that it is a legacy gift and will be received by an executor of the estate rather than the donor who has passed away. So you can find out about many other ways that donors can make planned gifts that you can recommend to your donors at presbyterian.ca, planned giving, ways to give a planned gift, and I hope you'll visit our site.
Hey, Jim, there's a question here.
Oh, yeah.
Are there any restrictions or cautions when dealing with the bequest of mineral rights or oil wells?
Oh my goodness. You'd have to talk to a professional who knows about that sort of thing. I don't think we would know about that. Karen, do you think?
I think it's just depends on the congregation whether or not they want to receive the gift or not. That's what I'm guessing, that this is because they're thinking that for oil wells, maybe the congregation doesn't want to receive the funds because it was made on extraction of oil. So the congregation, that could be part of their gift acceptance policy. Are they willing to accept it? That said, I think the Bible says something about making plows out of swords. And so, you know, if you can turn mineral rights into something that helps support communities, maybe that's a good thing. But
also, they might treat them like securities, in which case, like for the Presbyterian Church in Canada, we are obligated to sell the securities as quickly as we receive them. So it could be something where you say, we'll accept them, but we're going to sell them immediately. Yeah. Okay, Karen, back to you.
Okay, I know that we have really gone over time, so I'm not going to dwell a lot on this because there's a lot on our website and we have whole webinars on saying thank you. I just want to remind you that gratitude is contagious and that gratitude is biblical. There's an impact for thanking. Next slide. People will give 40% more, research has shown, if thanked and acknowledged, and this is for any charities. And I think it's amazing, our congregations, the people in our congregations, they give and give and give, even though they often aren't thanked or acknowledged. But it's important to know, particularly as we have younger generations, what they're getting from other charities and what's sort of motivating them to give, to know this. And research has shown that without timely, meaningful, and sincere thank yous and information on the impact of their donations, charitable organizations tend to lose 60% of annual givings from donors within a 1-year period. Over time, this can drop to 80 to 90%. So if you have some one-time donors who gave gifts and then have never given again, you might say, oh, did we thank them? Did we tell them what we did with their gift? Particularly ones who are not your members, who are giving because they've heard your mission or what you're doing and are excited about it at the time when they gave a donation. Just say thank you and let them know what happened. It's really kind of easy. There's many different ways that you can express thank you. You can thank them by letter, by telephone. You can have an event to throw a party. I thought a great idea was a congregation I was talking to who recently did a capital campaign, and they received a number of grants from their municipal government as well as local businesses. And so their idea was that they were going to throw a garden party so that they could celebrate those gifts as well as all the individuals who supported it. And I think that was a great idea. You could send thank you notes throughout the year with your statements, both throughout the year and with the annual statements. You don't have to wait to the end of the year tax receipt. Anything way that you can personalize it is great. If you can do something handwritten, even a little handwritten note, that makes it even better. Be sure to acknowledge your memorial gifts when they're given. While the person who is given a memorial gift has passed away, it can inspire people to think about how they might want to leave a memorial gift. How you treat the gifts that come in and the bequests that you come in sort of helps determine whether or not you'll get more bequests. Be always being positive and encouraging about people's giving. We never know what circumstances they are in. And so know that they are giving out of the resources that God has given them. Also, when you're saying thank you, don't use it as an opportunity to ask for more at the same time. Have it be a nice, simple thank you. You're just saying thank you. That's not to say that later, if you're asking for gifts or asking people to consider giving, you can't thank them again. But don't just say, oh, thank you. And by the way, will you give again? Be sure to give regular feedback, report progress towards your goals, use visual ways of reporting, and updates via newsletter or e-news. We're really going to look at reporting in January. So I hope that you join us for that seminar. Going to turn it over to Morris just to say a few words. And these are our last 2 slides before we get to answering more of your questions about other sources of revenue.
I'll try and be as quick as I can here. A lot of people have received grants, particularly in the last year since the COVID has come into place, and the government federally and provincially have been giving out grants to various organizations. And I would encourage you to consider if you had qualified or would have qualified for the grants and made the request for those fees. Again, within the Presbyterian Church, if you go onto their website, you'll see quite a number of grants that are available depending on the type of thing that you're planning to do. For example, I know that there's one for technology or updating your technology. Again, within our presbytery, we had some funds, and we took the use of those funds and offered them to congregations that were struggling financially during the last 20 months, just as a straight gift or a donation if they were in financial stress. Again, you don't have to receipt them, but just to acknowledge them. And we'll come to it in the January meeting about how to report these various grants on the different lines on your T3010. Next slide. This one is a bit of a concern, a bit of confusion as well. I had always been told that if there were more than 20% of your rental income, you could be considered that you're running a business. So I called CRA this morning and asked, what's the update on the percentage of revenue that's coming in from rental versus your other income and your offerings? And I was told that they don't have a They don't have a number. So I told them, I said, I called some time ago and they said, well, who did you talk to? I don't remember now, but it seems that you can rent out your building. Maybe you're renting out your space because it's not being used by anyone else. Or maybe you've got a parking lot and you can use your parking lot for people to park cars in and collect a fund. But ideally, what you need to do is to have a building use policy. You know, again, throughout the week, maybe you're not having people park in the lot. Again, in our congregation, we're near a subway station, but there was a close down on the lot, the subway lot for some time, and so people were starting to use it, and we were receiving rent that way. Again, you can receive rent for part of your building that maybe is being used for other things, but the overarching requirement is that it is used to substantiate and support the mission that you're working on. There is quite a bit on the CRA website where it goes through various definitions that you have to follow and what conditions that you would be able to apply and receive the rent on. Sorry, I'm a bit confused. It's a bit confusing here, but I always was under the understanding it was 20% revenue, or else you'd be considered running a business.
Great. Always glad to have more information, and that this sparked a little bit of research. So we'll be sure to update that. Here's our contact information, and you can find this on the website. Just if you have more questions, we're always happy to help and answer your questions. Next slide. And a reminder that the slides are going to be posted online. It seemed last week it took us until Monday evening to get everything posted, so it just depends on how quickly we can get it. But as soon as they're up, we'll let you know, and feel free to share them around. So we do have some questions that have come in through the chat. Oh, there's a reminder of the ones that are coming up.
I think Keith has been waiting patiently.
Yes.
He says, can you talk about the receipt status of small amounts given for prayer group memberships or amounts given by an individual to help pay for a gift for a retiring minister?
Okay. So, and I think maybe Keith, you were the one, you emailed this question in beforehand. I think it's a good one. So it all depends what you and how you are charging the prayer group memberships. So if you're asking or inviting people who are part of your prayer groups to voluntarily contribute a certain amount to help offset the costs of the prayer groups, then all of that can be receipted. However, if they're paying a membership fee to be part of the prayer group, so if they say in order to be part of this prayer group, you need to pay $5, then you're paying a membership fee and it can't be receipted. And they really can't say what the fair market value is for being part of a prayer group membership. So I'd find it hard to do any split receipting for paying to be part of the prayer group membership. So my suggestion there, and let me know if you think I'm wrong, Morris or Oliver, is that you say voluntarily, we ask you to give a gift of $5, then that would be fine. And you can just include that in some of the offerings that they're doing. And that relates to a question somebody asked earlier about concerts. When you sell, if you sell tickets to a concert, then you need to take off the value of attending that performance. But if you have a free will offering at a concert, then you can fully receipt people who give to the offering because it's completely giving voluntarily and they've just participated in a concert. It's not really a benefit to them because they haven't paid because anybody was able to come to the concert. That's my understanding of those two. Morris or Oliver, do you have any other ideas on that?
I think you covered it.
Great.
I think, was there another part of his question?
Yeah, there is part number 2, and I wanted to deal with that. So part number 2 is the amount given by an individual to help pay for a gift for a retiring minister. So this also sort of depends how you ask for and invite those gifts. You can, if you have a fund that would be a gift fund, you could invite people to give to the gift fund, but know that you're gonna give the gift to the retiring minister if it's valued at, say, $500. And I'm just pulling that out of the, if you get $1,000, you need to keep the rest of the $500 for future retiring gifts. I would think that's, Morris, what do you think about that?
I think you've also got to watch on the Conduit rules there as well,
Yes,
because you're giving it to a specific person through the church. And I think that the Conduit rules would apply there, and you would not be able to get the receipt for that.
yeah, I think it's better to sort of just to pool the money and give the gift that way. You can, it also comes back to, we were asked last week, if you're giving a gift to the minister, even as a retirement gift, if it's like a book or something, piece of a picture, I think that you're okay. But if you're giving a cash gift, a substantial cash gift, they still need to claim that as part of their income. All right, does anybody see any other questions that we haven't answered?
I think we've covered everything.
Does anybody, Grace, you can unmute people. If anybody wants to ask a question using their voice, they can feel free. And otherwise we will wrap up. We will thank you very much for participating. We will try and get copies of the questions as well and the answers for you.
I have a question.
Okay, go ahead, Gail.
Okay. If an individual takes on what is normally a paid position and wants to just do it as a volunteer, could this be similar to gift in kind? And this hasn't been asked. I'm just hearing now what you've said, that they could be paid if we paid them and then they gave back the money to the church.
That's right. And in fact, there's a surprising number of retired ministers who do that. And often, sometimes the congregations don't even know about it.
Okay.
But they can, yes, if you pay them though, you still need to pay them as if they were paying an employee, and they still need to claim that as their income. But they are welcome to give 100% of that back to the church. You can claim up to 75% of your incomes as a tax receipt. But probably they have other income that they're also living off of.
Right.
What you're paying. So yeah.
Okay. So they go right through the payroll process. It would be just as a normal employee, but okay, thank you.
Yeah. All right. Okay. So I don't see any other questions. We are available. Send us an email if we missed anything. Next week, we're talking expenditures. We will try to keep it short, but there seems to be a lot of things that can to talk about on these, and we hope that you're finding them informative. Thank you.